Olden Lane's bringing more solutions. We brought the sub-debt solution to this market, and that was the first step for us. It was confirmation of a thesis we had a few years ago, and now that we've confirmed it, we're moving on to our next. I want folks to want to be our clients and to see risk in not having a relationship with us, because they're doing things that are different that I can't necessarily get with my other brokers. And I'm missing something by not knowing these guys. There's three things right now that we think the industry needs and that Olden Lane is going to deliver. The first is from a risk management standpoint. We're entering into a period where there's a lot of instability in financial markets and the world in general. That's going to result in volatility. And that volatility is going to play out in the interest rate market. What we're seeing on the horizon is a lot of uncertainty. Obviously, we have an inflation backdrop that we haven't seen in multiple generations at this point. Coming out of a deflationary backdrop that's still persistent. And we're looking forward at a horizon where in 5 years, it's hard to tell whether we're going to have dramatically higher interest rates, and we'll never see a period of bouncing off a zero interest rate for a while, or if we'll be right back to a zero interest rate environment and contemplating the possibility of negative rates again. And in the interim, we're going to expect a lot of volatility because of that uncertainty. And so how is the industry going to manage what's likely going to be a much more volatile period in terms of interest rates? And how is it going to position itself with one of those two possible poles? And we think what it's going to need is more sophisticated risk management. And we're not the only ones. If you look at what the NCUA has done over the past year or so, they've loosened up their derivative rules to make it easier and to reduce the process and barriers for most credit unions to enter into hedging transactions. And they've added to their supervisory process, their standards, their CAMEL system, another category called S, which looks at market sensitivity, but it doesn't look at market sensitivity from the standpoint of how much risk do you have at this given moment. It looks at a credit union from the standpoint of how equipped is that institution to control market risk. And what we read into that is that credit unions need to have the capability to hedge interest rate risk. That means they need to be educated on the strategies and instruments that they can use to hedge interest rate risk. They have to have the proper policies and procedures in place, and they have to have access to the markets that they'll need to participate in to put on hedging strategies. And that's how we're approaching our clients. It's not for us, as it is for many others, about a transaction. I'm not interested in whether or not my client needs to hedge right now, or any credit union for that matter. What I'm interested in is the fact that only 100 or so credit unions have put on any sort of hedging transaction ever, and most of the industry is not equipped to hedge tomorrow, next week, next year, or 3 years from now at this point in time. And that needs to change. So what we want to do is engage our clients to set up the capability without regard to an immediate transaction, so that if they wake up one morning and sense the volatility or perceive risk emerging, they can take action, and they're not facing a 4 to 6 month process before they can even begin to take any effectual action. And so, what we're committing to do with our clients is make the process a no brainer, make it easy, give them the equipment, and not charge them or put upon them the pressure of entering into that first transaction, and make the cost and expense of doing so nominal. And the reason why we're doing that is because we're set up to face this industry in a very patient way, to give them the tools that they need, to take away the barriers and the friction and the obstacles that have historically prevented them from doing these sorts of things. And we trust, and part of our business thesis is that once we're able to equip a wide universe of credit unions, we'll benefit eventually. And we're willing to wait for that time. And so when you're working with us, there's no pressure to do a transaction. There won't be.